What is happening in the markets right now? The pace of change is absolutely insane, and if you're not plugged in, you are missing out on the biggest moves. Today, we've got a rapid-fire rundown of developments that could reshape your entire outlook. We're diving deep into critical price levels, groundbreaking technological shifts, and the institutional plays that are making waves. Get ready, because this is the information you need to stay ahead of the curve. First up, we're tracking a major digital asset that's on the cusp of a significant breakout. All eyes are on a specific price point that could unlock massive momentum, triggering a cascade of buying activity. We'll break down the technical indicators, the support and resistance levels that matter, and what this means for your portfolio in the short and long term. Could this be the catalyst for a major rally? You won't want to miss this deep dive. Then, we pivot to a major story about a rebound that's catching everyone's attention. What's driving this recovery, and is it a sign of renewed confidence in the broader market? We'll explore the factors behind this shift, including subtle but significant changes in how big players are allocating their assets. This is crucial context for understanding where we're headed next. Next, we uncover a strategic expansion that could fundamentally alter how we use a foundational digital asset. We're talking about innovative integrations that promise to unlock new levels of utility and accessibility. Discover how these advancements are positioning a key player for even greater influence and what it means for the future of transactions. And finally, we've got another critical look at how a major stablecoin is deepening its integration with a core blockchain technology. This move is being hailed as a potential game changer for institutional adoption, paving the way for wider utility and accessibility. We'll unpack the details of this strategic alliance and what it signals for the future. Stay locked in, because the insights you get here today could be the difference maker. Make sure you're subscribed and the notification bell is on so you never miss a beat. Let's get into it. A critical breakout zone is in sight. Bitcoin Cash, a significant player in the digital asset space since its 2017 hard fork from Bitcoin, is currently trading around the $557 mark in late August 2025. Analysts are closely watching key technical levels, with projections indicating that a move past $640 could trigger substantial upward momentum. This price point is being eyed as a critical battleground, potentially unlocking a breakout that could lead to significant gains, with some forecasts reaching as high as $689 in the near term. The technical indicators are showing signs of weakening bearish sentiment. Specifically, readings from the MACD histogram and RSI suggest that the downward pressure may be dissipating. Bitcoin Cash is currently trading above its 200-day moving average, a bullish long-term signal, though it remains below shorter-term averages, indicating a period of consolidation. The price action is hovering near the lower end of its recent trading range, suggesting ample room for an upward movement towards the upper Bollinger Band, currently situated around $619. Trading volumes on major platforms like Binance have been moderate, which could provide sufficient fuel for a breakout if buying conviction grows. Analysts are particularly focused on the $575 level, which corresponds to the 20-day simple moving average. A decisive move and sustained hold above this level would significantly strengthen the case for a continued bullish trend. Conversely, a failure to maintain support above $540, especially if accompanied by increasing trading volume, could signal a bearish reversal. Such a scenario might see Bitcoin Cash retest lower support levels, potentially dropping towards the lower Bollinger Band at $532, or even the more robust support zone around $481.90. Looking further ahead, long-term forecasts paint a picture of substantial growth. Platforms like Changelly project an average price of $67,133.5 by 2040 and an astonishing $152,217.58 by 2050. These ambitious projections are typically derived from historical performance data, sophisticated macroeconomic modeling, and anticipated advancements in network adoption and protocol upgrades. Other analyses offer more conservative, yet still positive, outlooks, with BCH expected to average between $1,800 and $2,200 by 2030. The future trajectory of Bitcoin Cash will undoubtedly be influenced by a confluence of factors. These include the ongoing adoption of BCH for everyday transactions, the development and integration of new network features such as cash tokens and smart BCH, evolving regulatory landscapes across different jurisdictions, and the overall health and sentiment of the broader cryptocurrency market. Competition from other blockchain networks and broader macroeconomic trends, such as inflation rates and interest rate policies, will also play a significant role in shaping its long-term value proposition. For traders and investors, the current market conditions present an attractive risk-reward scenario. Entering positions in the $550–560 range, with clearly defined stop-loss orders below key support levels, appears to be a prudent strategy. More aggressive traders might consider entering on a confirmed breakout above the $575 resistance, while conservative investors might prefer to wait for a more pronounced pullback towards the $540–545 support zone. Careful position sizing is crucial, considering the potential downside risk against the targeted upside. But what does this mean for the wider market sentiment? Stay tuned as we explore the factors driving a significant rebound in another major digital asset. Market sentiment shifts as major asset sees a rebound. In a notable development, Bitcoin's price has experienced a significant rebound, a trend that analysts are attributing to an improvement in overall market risk sentiment and a discernible shift in institutional allocation strategies. This recovery signals a potential turning point, suggesting that investors may be rotating back into riskier assets after a period of caution. The resurgence is occurring against a backdrop of evolving macroeconomic indicators and a more positive outlook on inflation and interest rate trajectories. As fears of a severe economic downturn begin to recede, institutional investors, who had previously adopted a more defensive stance, are reportedly recalibrating their portfolios. This recalibration involves increasing exposure to assets perceived as having higher growth potential, with Bitcoin often being at the forefront of such allocations due to its increasing integration into the broader financial ecosystem. This shift in institutional behavior is particularly significant. For a considerable period, institutional participation in the crypto markets had been somewhat subdued, influenced by regulatory uncertainties and market volatility. However, recent data and anecdotal evidence suggest a renewed interest, driven by several factors. Firstly, the maturation of crypto infrastructure, including regulated custody solutions and derivatives markets, has made it easier and safer for large players to engage. Secondly, the ongoing development of blockchain technology and its potential applications continue to attract attention from traditional finance. The narrative around Bitcoin as a potential store of value, akin to digital gold, also appears to be gaining traction among certain investor classes, especially in environments of economic uncertainty. Furthermore, the improved risk sentiment is not confined to Bitcoin alone, but is reflecting a broader trend across various asset classes. However, Bitcoin's performance often acts as a bellwether for the broader digital asset market. Its ability to reclaim key price levels and sustain upward momentum can instill confidence and encourage further investment across the board. The current rebound suggests that the market is digesting recent economic data more favorably and is perhaps looking past immediate challenges towards future growth prospects. Analysts are closely monitoring on-chain data and derivatives market activity for further confirmation of this institutional inflow and sustained bullish sentiment. Metrics such as the net flow of Bitcoin into and out of exchanges, the open interest in Bitcoin futures, and the positioning of large holders' whales are all being scrutinized. A consistent pattern of accumulation by long-term holders and a reduction in selling pressure from short-term traders would further validate the current recovery trend. The implications of this rebound and the associated shift in institutional allocation are far-reaching. It could signal the beginning of a more sustained upward trend for Bitcoin and the broader crypto market, potentially attracting more retail interest and further solidifying the digital asset class as a legitimate investment category. The narrative of Bitcoin as a digital store of value, increasingly recognized by institutional investors, is being reinforced by these developments. These are significant shifts in how major players are viewing digital assets. But what's next for the evolution of transactions on a foundational blockchain? We're diving into a strategic expansion that could redefine utility. Tether expands USDT on Bitcoin and RGB, igniting transaction layer evolution. Tether, the issuer of the world's largest stablecoin by market capitalization, USDT, has announced a strategic expansion of its operations onto the Bitcoin blockchain, leveraging the RGB protocol. This move is poised to significantly enhance Bitcoin's capabilities as a robust transaction layer, introducing advanced features and increasing its utility for a wider range of applications. The integration of USDT on Bitcoin, particularly through the RGB protocol, represents a significant technological advancement. RGB, really good lighting, is a client-side smart contract system for Bitcoin and the Lightning Network, designed to provide enhanced privacy, scalability, and security for digital assets and transactions. By enabling USDT to operate natively on Bitcoin via RGB, Tether is tapping into the network's inherent security and decentralization while offering users the flexibility and stability of its stablecoin. This synergy aims to bridge the gap between traditional finance, stablecoin utility, and the foundational security of the Bitcoin blockchain. This expansion is not merely about adding another platform for USDT. It's about unlocking new functionalities. RGB allows for the issuance and management of digital assets, including stablecoins like USDT, in a way that is highly scalable and privacy-preserving. Transactions involving RGB assets are validated client-side, meaning that only necessary information is broadcast to the blockchain, reducing the overall data load and enhancing transaction speeds. For USDT, this means that transactions can be conducted with greater efficiency and privacy, making it a more viable option for a wider array of use cases, from micropayments to complex financial contracts. The implications for Bitcoin's role as a transaction layer are profound. Historically, Bitcoin has been primarily viewed as a store of value, often referred to as digital gold. However, this integration with protocols like RGB and the expansion of stablecoin functionalities are bolstering its utility as a medium of exchange and a platform for decentralized applications. By supporting assets like USDT in a secure and scalable manner, Bitcoin can attract more users and developers, fostering a richer ecosystem and increasing its overall adoption. Tether's decision to leverage Bitcoin and RGB is strategic. Bitcoin's unparalleled security and vast network effect provide a solid foundation for any asset operating on it. RGB, in turn, offers the technical sophistication needed to handle complex smart contract interactions without compromising the core principles of Bitcoin's design. This combination allows for the issuance of digital assets with features comparable to those found on other blockchains, but with the added security and trust associated with Bitcoin. This development is expected to attract greater institutional interest in the Bitcoin ecosystem. As institutions become more comfortable with the capabilities of the Bitcoin network beyond simple value transfer, the demand for Bitcoin as a foundational layer for digital finance is likely to increase. The ability to manage assets like USDT securely and efficiently on Bitcoin could pave the way for more sophisticated financial products and services to be built on the network. This strategic integration highlights a pivotal moment for Bitcoin's utility. But how does this compare to other major stablecoin initiatives on the network? We're exploring another key development in stablecoin integration and its impact on institutional adoption. Tether's native USDT on Bitcoin, a game changer for institutional adoption. Tether, the leading issuer of stablecoins, has taken a significant step by natively integrating its USDT stablecoin onto the Bitcoin blockchain. This strategic move is being widely recognized as a major catalyst for institutional adoption, aiming to enhance Bitcoin's utility as a robust platform for financial transactions and asset management. The native integration of USDT on Bitcoin represents a significant enhancement of Bitcoin's capabilities as a financial infrastructure. Historically, stablecoins have primarily operated on other blockchain networks, often chosen for their smart contract capabilities and transaction speeds. However, by bringing USDT directly onto the Bitcoin network, Tether is leveraging Bitcoin's unparalleled security, decentralization, and massive network effect. This integration aims to provide institutional investors with a familiar and trusted stablecoin operating within the most secure blockchain environment available. This expansion is crucial for several reasons. Firstly, it addresses a growing demand from institutional players who seek to engage with digital assets, but often prefer to do so within the established security framework of Bitcoin. By offering USDT natively on Bitcoin, Tether simplifies the process for these institutions, reducing the need for complex multi-chain management and mitigating associated risks. This native presence allows for seamless transactions and settlements directly on the Bitcoin network, potentially increasing the velocity of capital within the digital asset ecosystem. Secondly, the move is expected to bolster Bitcoin's utility beyond its role as a store of value. While Bitcoin is often compared to digital gold, its potential as a powerful transaction layer for financial services is increasingly being recognized. The native support for stablecoins like USDT on the Bitcoin network opens up avenues for a wide range of applications, including decentralized finance, DeFi protocols, cross-border payments, and collateralized lending, all operating with the security and immutability of the Bitcoin blockchain. This could lead to a significant increase in demand for Bitcoin block space and transaction fees, further strengthening the network's economic model. Moreover, this integration aligns with the broader trend of traditional financial institutions exploring and adopting blockchain technology. As more regulated entities look to enter the digital asset space, the availability of compliant and secure stablecoin solutions on foundational blockchains like Bitcoin becomes paramount. Tether's proactive approach in establishing a native presence on Bitcoin positions it as a key enabler for this institutional onboarding process. Analysts are closely watching the on-chain metrics and market response to this integration. The success of native USDT on Bitcoin could set a precedent for other stablecoin issuers and digital asset projects, encouraging them to build directly on Bitcoin's robust infrastructure. The increased utility and institutional accessibility could lead to greater adoption and a more mature digital asset market overall. This strategic move by Tether is not just about expanding its own reach. It's about unlocking the latent potential of the Bitcoin network as a global financial settlement layer. By providing a secure, stable, and efficient way to transact with USDT on Bitcoin, Tether is effectively laying down a crucial piece of infrastructure for the future of digital finance, potentially accelerating the mainstream adoption of cryptocurrencies. This strategic integration highlights a pivotal moment for Bitcoin's utility. But what's next for the evolution of transactions on a foundational blockchain? We're diving into a strategic expansion that could redefine utility. All right, let's do a super fast recap. Bitcoin Cash is eyeing a massive breakout past $640, potentially igniting a rally. Bitcoin itself is showing a strong rebound, fueled by renewed institutional interest and shifting asset allocations. Tether is strategically expanding USDT onto the Bitcoin network using RGB, boosting Bitcoin's transaction capabilities. And Tether's native USDT on Bitcoin is being hailed as a game changer for institutional adoption and overall utility. Don't miss out on any of these critical updates. Hit that like button if you found this valuable, subscribe to the Bitcoin Bulletin for your daily dose of market intelligence, and ring that notification bell so you're always the first to know. Share this with your network and let us know your thoughts in the comments below. Follow us on all social platforms for real-time insights. We'll see you in the next one.